The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the magnificent Monday, the October 27th edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Now, the easiest way to do that is always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email, send it off early, and send it to Steve at TFNN.com. Inside that subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day here with a rally. Dow is up 200 points, S&P 58, 378 for the NASDAQ 100, 7 for the Russell, 98 for the transports, 194 for the semis, 349 for the NASDAQ composite, and $46 for the New York Stock Exchange. We've got gold trade down $145, testing profile support at 4,004. We're printing at 39.91. We're down $2.45 on silver. That's a 46-point move there. I'm sorry, we're down $2.45. Price is printed at $46. Don't worry, I'll get that out. Copper is basically flat. Natural gas is up 10 pennies out there. And we've got the XLRE highlighted. That's because it's going to go ahead and complete a TD9 count topping pattern today, so long as price closes above the close of bar number 5, which is 42.35. We're at 42.53. Not to be dyslexic or anything, so you want to watch that. If we do get that top, we also have a new profile that is formed. It is a bearish structured profile. It's got a sell zone between 42.76 and 42.38. If price closes below 42.38, it increases the odds of a move to the bottom of its profile, which is at 41.76. The only hesitation there is the green oscillator and change line is wedged between the center of the profile and the bottom, and that can be a place of support, currently at 42.18. Weekly time frame chart just shows a sideways consolidation for the real estate sector. That consolidation has started right back in May 2nd when we take a look at the weekly time frame. So been around for quite some time. If we take a look at the monthly time frame chart, you'll see price you'll see that sideways consolidation even easier, and price there consolidating with inside its profiles 39.88 as support, 45.58 as resistance. 30-minute time frame chart may be headed back to its breakout level of support. That's at 42.27. So we're about to get a looks like a TD9 count topping pattern inside of one of the sectors inside the S&P 500, the XLRE. The others don't show that at this moment in time, but I do see that. I see one potential, a couple by the healthcare, the XLV probably is going to form bar number 8 today. We'll just go ahead and put that chart, that sector up on our screen out here. We'll take a quick peek at that. We see that it has successful bar number 7. Or formed a bar number 7 on Friday. The question is, are we at a higher high this morning with regard to the XLV? And the answer to that question is no. Bearish reversal candle on the daily time frame would confirm a Rhodes momentum indicator top, but we don't have that as we speak right now. So it's possible you've got to tick above yesterday's high. No, we're not going to. Well, today for the XLV, first you got to form bar number 8. To do that, you have to close above 145.13. Then you absolutely have to get a rally come tomorrow because price would have to close above 145.96. So not too certain about the XLV and its TD9 count topping system. We'll take a look at that come tomorrow. It'll pop up on our screen if it does that, or it'd be the next day that it would pop up on our screen. Let's take a look at what's going on with the daily equity future contracts out here. So we've got the ES mini upper left-hand side. Last Friday, it negates its Rhodes momentum indicator top. We're trading about profile resistance. We do have a Rhodes momentum indicator signal that's triggered. That needs a bearish reversal candle to confirm a top. Now, today is going to become bar number 8. I mentioned that at the open for the ES. I think I did. The NQ and the Dow, not for the Russell 2000. The Russell 2000 for its daily time frame still has its Rhodes momentum indicator top. That was tested earlier this morning. What I mean was tested, price got up above 25.59.90, and we're trading back below that. So that pattern still is in play, but the signal itself is neutral. And the reason it's neutral at 11.11 is because price is trading about profile resistance and its green oscillator unchanged line. As we take a look at now the Dow, the NQ, and the ES Mini, the ES Mini and the NQ have Rhodes momentum indicator signals, so bearish reversal candles would also confirm a top there. But it's likely a TD9 count short-term top that forms out here. We're day number 3 to the upside at this moment in time for the ES and the NQ. So it makes sense that we get a 4th day, maybe even a 5th day. The last time we saw a top out here, short-term top that is, for the ES and the NQ, it was after a 5-bar rally out there on Wednesday. That would complete the TD9 count top. So all of that makes sense. Now, all that means that price should pull back to test support. In the case of the ES Mini, that would be the top of its profile at this point in time, 68.12. For the NQ, it would be about 25.440. That's its oscillator and change line. And below that, the top of its profile, 25.270. Dow equity future contract, the only topping signal it has is a TD9 count. It says you could get a top between today and Wednesday. And again, the Russell 2000 is triggered wave number 7. It did that this morning. It still has a Rhodes momentum indicator top, so it doesn't need anything more than that. Now, that's on the daily equity future contract. So I'm going to go ahead and close down. It looks like I forgot to open the weeklies. We're going to go ahead and do that anyway. We'll spend just a moment here so I could find them right there. And we'll put up the weekly time frame charts. The reason I want to do that is because I know you just heard me say we've got a potential for short-term topping signals, ESNQ and the Dow. I want you to understand that very likely it is just a short-term 2 to 4 day pullback out there. Why? Let's take a look at the ES Mini on the left-hand side. The ES Mini last Friday negated its TD9 count top. It's trading about profile resistance and its oscillator and change line. It's in full breakout mode. There's not even a signal out here that could give us a topping pattern. And the NQ, different story. The daily's got that TD9 count in bar number 8 today. Weekly is also in bar number 8. But remember, the top can come on bars number 9 or the bar following 9. So the NQ may not form some type of top. And really, when we go take a look at the NASDAQ 100, I believe we see there is no TD9 count top. But we'll take a look at it. We'll try to take a look at it. On the Dow equity future contract, no topping signal here. The Russell 2000 does have a sell the D point top, but that would be taken out with a close above the high from October 17, 25.59. So it's the Russell that's the only indice out here. Not the only, but of the 4 equity future contract indices, it's the only one that's really got a topping signal. The others have potentials, but they've got to be confirmed out there. The Russell still has one that is in place. All right, I'm going to go ahead and close that down. We come back from this break. Let's do this here. Let's first take a quick peek at the advanced client oscillator line and the spot VIX index. And then we'll look at ARM Holdings, IREN, and AutoNation. We'd love many, many more requests out there. Steve at TFNN.com or any ping inside the Tiger's Den. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Let's take a quick peek in on the New York Stock Exchange. Its advanced client oscillator, still above the zero threshold level, provides buyers with an edge. We are in bar number 9 on the New York Stock Exchange. That says we should get a top between today and tomorrow. Spot VIX index is still well below its 50-day exponential moving average. We're printing at 1601. The 50 days at 1734. Buyers have the edge using both of these tools out there. So that's important to know. What else we want to go take a quick peek at? I would have to say nothing. Let's go take a quick peek at the requests that have come in. And let's start with ARM Holdings. This one coming in from Duncan Steve. ARM Holdings right now is trading out at 178.95. It is trading above its profile resistance. It needs to close above. It looks to me like, let me just pull this back just a tad. Yeah, it's going to need a close above its bear shooting star from October 14th. That is under attack. 12 million shares, 2 hours of trading, 4 million shares. So you're moving up with about similar type volume. If price can close above 180.34, it will negate its sell the D point top. So that's the number you're watching, 180.34. Otherwise, that top has been tested. Looks like it might be tested with volume. Won't know that till the day's end out there. So that's the first thing on the daily time frame for ARM Holdings. Weekly time frame. Likely to form bar number 8 of a TDI count. Just needs to close on Friday above the close of bar number 4. That would be at 152.64. Now, then next week, price has got to close above the close of bar number 5. That would be 154.81 out there. So it's got the potential for a TD9 count topping pattern that would form next week, complete the following week. On a monthly time frame, everything looks bullish here. We're trading up profile resistance. We are trading into a swing point for back in July of 2024, 207 million shares that month. This month so far, we're up with 114. So we're going to move into that swing point, or we are in that swing point with lighter volume. Nonetheless, we're going to close inside. It's going to be the daily and the weekly that controls the action for ARM Holdings. So right now, respectfully sell the D point top, disrespect it if it closes above that bearish shooting star high out there. And again, that number was 180.34. You also want to take a look at IREN. Let's pull that chart up on our screen out here. IREN right now is trading out at 64.48. 64.48, 64.44, or anything above 63.77 is going to be a bullish signal for you, Steve-O. 63.77 is the top of its daily profile. We're testing its oscillator and change line right now. If you close above that, even better. But two consecutive closes above 63.77 should suggest a run for its highs out there. It's got a TD9 count top. That TD9 count top went ahead and completed on the day of October the 14th. That high is at 72.30. A close above that high negates that signal and says we move higher. Monthly time frame chart has a TD9 count top. In order to negate that, it needs to close above 70.05. So top on the daily, top on the weekly, no top on the monthly. We have been up for, my goodness sakes, 1, 2, 3, 4, 5, 6 consecutive weeks, maybe even a 7th consecutive week last week. So this could be getting long in the tooth out there. That's a pretty long move to the upside. I would say, Steve-O, if we get back underneath the profile, back inside its daily profile, that's formed on Friday of last week. That means a close below 63.77. Then you could at least see at least a couple-day pullback out there. Look, the TD9 count top for the weekly time frame, probably to the downside, the number you want to be focused on is its oscillator unchanged line. That is currently printed at 49.23. As you know, price would... that number would go lower as price moves lower out there. If you look at the breakout level in the daily time frame, 44.95 is a number that's out there. That's the daily time frame right now is not worried about 44.95. It's trying to deal with taking out resistance out there. So watch that. You've got the charts here to pay attention to, and definitely pay attention to the daily and the weekly. Monthly looks good. I think that means that just when the weekly and daily are done doing their thing, which should be testing support out there, then it's likely headed back to the upside. The next request that came in is from Phil. Phil wants to know, where is AutoNation headed to? Phil, I think the answer to that question is relatively easy to answer. And here's the reason why. Let's start with the longer-term time frame, the monthly chart. It appears that come this Friday, it will generate a Rhodes momentum indicator top with price below its green oscillator and change line. So it is telling us it has lost its momentum for the monthly time frame. Why is that important? Because the daily time frame has us trade. It's got a Rhodes momentum indicator top. It has price trading below profile support at 212.68. Bar number 7 for this week out there. Only 2 weeks in a row at this stage here to the downside. So no reason for it not to move to the downside. So the monthly says I want to head lower. The weekly says I want to head lower. And the daily is trading below a bullish hammer candle that formed out here back on September 26th. We closed below that on Friday. We tested that on Thursday. We are likely headed towards 189.97. 189.97 is the TD9 count breakout level. Now, I don't show a pattern at this moment in time. In fact, I don't know if there's an A to B equals CD pattern. But look, I'd say your question was, where is price headed to? It's breakout level, 189.97. This is going to be 4 days to the downside, so you could see a couple bar rally out there. But with price being support on these 3 time frames, patience. 189.97 is very likely where AutoNation is headed to. So hope that helps you out, Phil. Good to hear from you. Thanks for the request. Captain Dan inside the Tiger's Den wants to go take a look at USAR. Now, USAR, he's looking for an entry point. Today's bar number 8, we gap to the downside. If you take a look at the weekly time frame chart, in a gap to the downside, we are now trading below its green oscillator and change line for its weekly time frame. Lost momentum. So how would you answer his question? How would you answer the question for Captain Dan? Where should he be looking for an entry point? All right, let's stick with the weekly time frame chart. The weekly time frame chart has a new profile that is forming below price. That is a bullish signal. That doesn't mean price won't test support. In fact, I would say odds favor price will test support. Well, where's support, Steve-O? It's at 1946. Now, if price were to get below 1946, we'd be looking at 1640. Is 1640 a real possibility? Absolutely. Why is that? 1630 is the daily TD9 count breakout level. It formed a TD9 count top. No reason now, with price being below all kinds of support areas, for us not to get back there. Now, in doing so, today would be bar number 8. Tomorrow would be 9. Wednesday would be the bar following bar number 9. So that's what you'd be looking for, is a bottom is sometime between tomorrow and Wednesday out there. But I'd say more likely Wednesday, but you got to watch price action. And that first price action of support could be at 1946 out there. That's, again, the top of that weekly profile. So I hope that helps you out, Captain. Today is not the day. It doesn't appear to be the day to be taking a long position. Now, it will be day number 5 in a row to the downside. So would not be unusual to see a 2-day rally out there. And a 2-day rally, as long as price remains below the close of bar number 4 today and bar number 5 tomorrow. Tomorrow's bar number 5 close was at 24.46. That would get you your TD9 count pattern out there. So I hope that helps you out. Visual inside the Tiger's Den wants to start taking at high-ho silver out there. So we'll go ahead and put up the daily, the weekly, and the monthly time frame. That's where we are going to begin, but we'll mostly begin when we come back from this break, which is going to start in about 2 minutes. What we can say about silver is it is triggering an A to B equals CD pattern to the downside, or certainly looks like it is. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. So we're taking a look at the stock charts here for silver, the December contract. Visuals looking for an entry point into silver. During that break, I went ahead and took away that A to B equals CD pattern that I had drawn in before the break to the downside. The reason I did that is the retracement, meaning from the high of October 17th to the low that came in on October 22nd. That retracement was just a one-hit wonder, one-day rally. On the 23rd out there was less than a 0.382 retracement, well less, only about a 23% retracement. And some people do use 23% as a Fibonacci number out there, and not that you can't, but I'm not going to put in the A to B equals CD pattern. We are in bar number 5 to the downside, so you could theoretically get a TD9 count bottom by week's end out there. And so that's a pattern that I'll be looking for. Now, where is it that silver could move to? Because we're trading below profile support. I don't know if we're going to close below profile support at day's end. We're going to go look to the intraday charts here in a few minutes to try to help answer that question for us. So at this stage here, let's assume that we don't see a rally that's going to take us back to the 47.40 level. Do we close below that again tomorrow? And if so, then we'd have a not only Rhodes momentum indicator top, but we'd have a bearish profile change in trend. And you could get back to $38 and a penny. That's its daily TD9 count breakout level. Weekly time frame chart as we speak right now says hold your breath. Maybe we've got support. It does have a TD9 count top. It completed that last Friday. And price right now is testing a key level of support. And that is its green oscillator and change line. And, that's the first place that you're going to be really paying attention to for the rest of the day here. Does that oscillator and change line, currently printed at 46.47, doesn't hold? We're printing at 46.42 right now. And you can give it a smidgen, okay? I wouldn't call this a break of the oscillator and change line where we're at 46.41. But if we do close below that level, and certainly significantly on a weekly basis, then that's going to open up the door for a move to 37.44. So you'd have 37.44, 38.01. The monthly time frame chart is in bar number 8 as we speak. Now, if I were to put the continuous contract up here, I don't think I even have to. I think we can find an A to B equals CD pattern to the upside out there. So if we got a bearish shooting star candle, you could get, or any kind of bearish reversal candle this week, you could form a sell the D point top. We don't know if we've got that or not, so we're not going to focus too much time on that. But we do know that we are at support on the weekly time frame, that oscillator and change line. Other things I'll point out here is that the rally that we came off of that Rhodes momentum indicator top on the daily time frame, we've seen 2 1-bar rallies. That's another signal that the trend has changed up there. We used to have basically 1 to 4 day pullbacks and then rallies that went from 2 to 4, 5 days, sometimes, in a row, consecutive day rallies out there. Weekly, last week was the first week to the downside. No reason to not have a 2 to 4 bar move to the downside out there. So watch that oscillator and change line. You kind of hear what I'm saying, is we may be quite a ways away from a bottom out there. All really depends. Now, each of us know that as we took, I don't have my black background chart, but you've looked at it enough. Maybe during the segment I do with Tommy, I'll pull that back up again for us to take a look at. But we took a look at key data points, geopolitical data points on a gold chart. We didn't do it on the silver chart. We know there's substantial premium built in, geopolitical tension, war premium. We saw the first move to the downside. It was a day or two after the ceasefire in Israel. Whether or not that's going to hold with Hamas or not, if you're a betting person, in Vegas, I don't even know if they got odds on that. Odds favor, no, but which is, I think, is why gold has continued to elevate itself. But the real question now becomes is, can the Ukraine war move away? I'd like to think the answer to that is yes, because that's one that could really start the major war out there. So there's a premium certainly in the metals and certainly in the miners out there. So be careful, because miners to the upside, when you have a bull market, they move much faster than the actual metals do, percentage-wise. Same is true to the downside. So you got to really be careful. Oftentimes it's the XAU or the GDX that are giving you an advanced warning as to what metals are going to do out there. So, you're asking for an entry point. Now let's go from these charts here. Let's take a look at the day trading, intraday type charts. See if there's any kind of bottoming signals while the weekly time frame chart is at its weekly oscillator and change line. That was the only level of support that we saw out there on silver. Now we're going to see if there's any intraday levels of support. So when I see the 5-minute time frame, 5-hour time frame chart, I said 5-minute, 5-hour time frame chart, I don't see a bottoming signal. I see it's below its red oscillator and change line as well as profile support. I don't see a bottoming signal on the 4-hour time frame. The 2-hour time frame is going to go ahead and complete confirm a TD9 count top at 12 noon. It'll complete that pattern at 2 p.m. So that signal says we could see a bottom. The 50-minute time frame chart looks like it did form a TD9 count bottom pattern. It's going to complete that pattern here at 11:45. It'll complete that pattern. The question is, if silver's going to rally a bit, what we need to see is a close above 46.60. That is the top of the profile of a 15-minute time frame chart, but nonetheless breaking support no matter what time frame you're looking at. That's got a bottom pattern, or resistance, I should say in this case. You break resistance, you're likely to head higher out there. The 10-minute chart negated its TD9 count bottom. So the only chart time frames for silver, that have got potential bottom patterns. One is the 50-minute chart. That's confirmed. The 2-hour chart is also confirmed. It completes that, confirms that. It completes that TD9 count bottom at 12 noon. Okay, perfect. So if we start seeing silver trade below that low, I'm assuming that in the next 24 minutes we don't get down and take out the low of 46.05. 46.05 is going to be your key number. In fact, to be exact, it's really 46.055 out there. If we close below that, we are headed lower in silver. And again, those price targets, that $38 area is a definite price target for high-ho silver. Let's go take a look at Goldilocks out here, because these things are going to work in tandem and certainly going to affect the mining sector out there, the miners. Let's take a look at gold. Here, if we take a look at gold, we know that gold right now is testing key support. And the key support is at the 4,004, exact number 4,490. We're trading out at 4,410. So we're testing support out there. Will it hold? I don't know. It has a good chance to hold, just looking at the daily, weekly, and monthly. What do you mean it has a good chance to hold? Well, on the weekly, which has a completed TD9 count top, it did that last week, price remains above its green oscillator and change line. So you're above a resistance level out there. On a weekly time frame chart, you're testing the support level on the daily time frame chart. That's why I said what I said. And then on the monthly time frame chart, look, I do not believe that the move in gold is over. We could get a 2-month pullback. That's normal in a move that goes higher out there. We're going to be higher. It looks like we are going to finish higher. This would be our 3rd month to the upside. It takes a lot of energy to do that. So to back off for 1 month or maybe 2 months, that could easily be in the cards. And then you know what you'd be hearing? You'd be hearing everybody say the move in gold is done and over. Stevie's looking at this chart saying, not so fast. I don't think so. But we could get a 2-month pullback. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. If at 2 p.m. gold is trading below the price point of 40.21.20, odds favor that where we're headed to is an A to B equals CD pattern. We're looking at the 5-hour time frame chart. The 1-to-1 price projection on that would get us down to the 37.88 level. Remember, 38.61 though is the TD knockout breakout area for gold or its daily time frame. The only bottoming signals from an intraday basis. Well, let me pull this back here. Just make sure. Let me just, no, that's going to be more than a retracement out there. I'm just looking to see if there's I noticed a bullish hammer candle that formed at 11:30. What I'm looking for is to see if there's any kind of A to B equals CD pattern to the downside. I think this retracement here, let me just check this retracement out here, which is going to be from, oops, what happened there? Fibonacci retracement, function 8. So I got a TD9 count top. This took place at the 12:30 for gold. And if I pull that all the way down to here, pretty close to 0.382 retracement. So gold for the 30-minute time frame does have a buy the D point bottom pattern. That was formed with this bullish hammer candle. So if we close below that, you close below the low of a bottom of a hammer candle. The expression is if you're long, you're wrong. That being 39.85.90. Now what should take place out here is price should be able to rally up into its oscillator and change line. That's at the 40.18 level out there. I remember the candle that we're in right now. This is a 30-minute time frame chart. So at 12 noon. It doesn't really matter what time. Just, the ideal time or ideal price point for buying a hammer candle is pretty much from the middle of the wick on up. But usually that's best to be done about 2 or 3 bars after the hammer candle forms. We're only in bar number 1 after that. But you do have a bottom pattern on gold for the 30-minute to 15-minute. It's got a TD9 count bottom, price found resistance at its oscillator and change line. Rhodes momentum indicator bottom on the 10-minute. It's finding resistance at the bottom of its profile and oscillator and change line. So the move the upside at this stage here is right now has been limited. You got to see moves above those oscillator and change lines in order to suggest that the rally is going to extend itself. So it looks like we're getting closer here to the answer being no, and that gold would move lower. If gold's going to move lower, so too is the XAU, so too is the GDX out there. We'll come back to those if those are requested out here. But first, let's go to the next request that we've got in, which is that's not it. That was a gold contract we looked at. It was to take a look at the Hang Seng, and this is for GTE. And the Hang Seng last night, what it did is you can look at the daily time frame chart. Price closed back above its green oscillator and change line out there. So that's a bullish signal. And your question was, where's upside resistance? So upside resistance for the daily time frame would have to be, it's a high out here. And that's the high, or the swing point at least, from October 2nd. Between the range of 26,918 and 27,381. That's on the daily time frame. Resistance for the weekly would be its green oscillator and change line, currently printed at 26,657. The monthly time frame resistance would just simply be a descending trend line. So as we pull this back, we can see that the Hang Seng, which topped out here in January of 2018, we then had another rally that led to this descending trend line in February of 2021, and we are at bar number 9 of a TD9 count. So this is going to form a monthly TD9 count pattern this week. It'll complete that pattern next week out there. So your next resistance level, your true next resistance level, is the weekly chart, and that's up at about the 26,657 level. And that was for GTE. Thank you for your request. LB would like to take a look at ticker symbol MIND. So we're going to go read the mind of mine to try to figure out where this is going. Now, LB, and luckily so, has been a long-term participant inside this equity. We're trading. I'm going to look at the long-term chart, the monthly time frame chart. So on a monthly time frame chart, the question is buy, sell, or hold. So let's go with hold on the monthly chart. Why does it say hold? Because price is now trading above the top of its monthly profile, and that profile is at $10.80. And we're trading 1192. So you're about to get a potential profile change in trend. This monthly profile formed above the prior profile, meaning the low is a higher low, the high is a higher high. That's a bullish signal out there. So the monthly chart is saying, you know what, LB, why don't you stay with this position out here? All right, let's look at the weekly chart. The weekly chart, if it closes above the high from the week of August 22nd, the high, 1150, we're at 1188. Week doesn't end till Friday, but if we do close above 1150, the Rhodes momentum indicator top and TD9 count top will be negated. We're trading above that now. We're trading above profile resistance. We're trading above its green oscillator and change line. The weekly time frame here, LB, have no reason to sell. So this says hold. If we take a look at the daily time frame, the daily time frame chart today, if it closes above the high from August 22nd, that high, 1150. We're trading at 1188. You will negate a Rhodes momentum indicator top for that daily time frame. That swing point has volume of 324,000 shares so far in 2 hours of trading toward 600,000 shares. You are getting what looks like a new A to B equals CD pattern to the upside. You are. You most certainly are. And I would be starting that probably just in a somewhat conservative. I'd probably be starting it down here, the low from June 11th. The high, as we know, it's a Rhodes momentum indicator top on August 22nd. If I just move that over to the low that forms after that, I'm pretty close to it. Sorry about that. Hold on a moment here. We're not going to be dead on balls accurate. We're not worried about that. So you got about 1389 or so would be the confirmed A to B equals CD pattern today. Again, that is under the assumption that price closes above the high from August 22nd. 1150 is that number. We are at 1195. So I would hold the daily, the weekly, and the monthly charts for ticker symbol MIND. It's got a mind of its own, and that mind right now says I want to head to higher price. So LB, I hope that helps you out, and I hope that things don't change between now and day's end and things start to pull back or what have you. So best of luck to you there. Duncan Steve is interested in DGNX. So let's go find where Stevie put that chart. I think it is here, and it is. So DGNX, what do we know about it? First thing, we know that it started trading back in January of 2025. At least I believe that it did. That's what my charts are saying. Monthly time frame's got nothing for us to work with there. Let's go to the weekly time frame. The weekly, in fact, does. The weekly topped on bar number 8 of a TD9 count, and it has pulled back to the buy zone of its weekly profile. So the buy zone here, Duncan, is between 1034 and 1362. Last week we got down to a low of 1278. So prices explored the buy zone. It's rejected that buy zone, and maybe that tells us that we are going to see a rally. The weekly chart, if it's just a 2-week, which it was so far last week, just a 2-week knee-jerk reaction low, that would be bullish. All right, so what do we see on the daily time frame? DGNX. What I see here is not a top, but the weekly had the top. The daily, though, pulls back to its TD9 count breakout level, Steve-O, and that's at 1350. And basically it held. So that can be a buy area. Now, there's a new profile in the daily time frame, and your resistance at 1618. Support is at 1391. It's strong support. Both the bottom and center of the profile are 1391. You get it closed above 1618, then you're headed higher. And that's headed higher about 1844. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Anybody feel like a Dr. Pepper? We're going to take a look at the stock charts. It is KDP. That's a Keurig Dr. Pepper entity out there. We've got the seasonal chart out there. We've got 17 years worth of data, Steve-O, that we can take a look at. What this shows us is right now we should be in a favorable time period. October is a favorable month, but we are about to enter November, which typically is somewhat flat out there, and then December typically has a rally. So that's what the seasonal pattern shows us for Dr. Pepper. The daily chart says, hey, Steve-O, look at what we got here. Did you just say that we were about to form a bottom? Well, what we got today is now a confirmed A to B equals CD pattern to the upside. The B point, which was a TD9 count top, that formed on October 20th out there, has volume of 11 million shares. So far today, we're up at 25 million shares. That's got an A to B equals CD price projection, Steve-O, that ought to get us to 30.35. I'd say the way you came off that C point, exploding off of it, this will be more than a 1-to-1 A to B equals CD pattern to the upside. The weekly time frame has a buy the D point bottom pattern out there. It was more than a 1-to-1 A to B equals CD. That was formed with a bullish engulfing candle back in October 17th. Price right now is consolidating with inside its weekly profile. The resistance zone that it should next target is at 30.49. That daily A to B equals CD gets us at 30.35. I said this should be more than a 1-to-1 A to B equals CD pattern. If that's going to unfold, price must take out profile resistance for the weekly chart. 30.49 is a number for you to watch out there. The monthly time frame chart is not going to assist us at all. It has an A to B equals CD to the downside. The volume on this B point was 216 million shares. It was passed with 478 million shares. It has not completed its A to B equals CD pattern to the downside. Does it have to? The answer there is no, but you got to watch the daily. It's a daily and weekly that are really going to control what the weekly chart is going to do. Boy, I needed to be a genius to say that, didn't I? Steve, I hope that helps you out. Hope that helped everybody out there. Thanks so much for your participation today. I'll look forward to seeing you on Terrific Tuesday, or maybe this afternoon about 3:15. Short of that, have a magical Monday. Be safe out there. Take care. And again, thanks for showing up today. Take care.